All right, super exciting. We're back from our quick summer break, back to trying to do a podcast, Ernest, at least once a week, see if we can manage that. We do have jobs, of course, managing other people's money, but we love doing the podcast and talking long-term investing. So, Ernest, how have you been the last few weeks?
It was good. We went away. We went to Japan and Hong Kong, where I have both. My family has a lot. I have a lot of family in Hong Kong.
Yeah.
And that was the primary purpose of that trip.
And how did you survive the plane ride?
It was uncomfortable, to say the least.
I bet.
But my kids are a bit older now, and they relished the opportunity to watch movies and shows as much as they wanted. And that's what you do on the flight.
Yep. And I was in Spain for 2 weeks, late July, early August. All I can say was I ate way too much ham, and it was very sweaty there. Very hot. Very hot in Europe this summer. Oh my.
Is there a special type of ham that they have there?
Iberico ham. It's a special pig, and it's sliced. If it's sliced properly with a little bit of olive oil on a nice crunchy toast, it's very delicious, although I don't recommend eating that every day on a vacation because it's probably not very good for your cholesterol levels. But lots of interesting things happened, of course, in August while we were on vacation, while we were away. I think the markets got a little bit worried at some point in August. You saw Buffett, of course, with the announcement of selling down a good portion of Apple. That was a gigantic move. It's something we didn't talk about. We had a lot of company earnings, of course, the big techs. Some of them kind of got beaten up after their quarterly earnings and have recovered. We saw, Ernest, of course, the Federal Reserve talk about possibly cutting interest rates, Bank of Canada continuing cutting interest rates. So things are coming into line for those that were thinking about the economy would fall into a soft landing. That seems to be the base case for now. At one point, of course, in August, many were worried that we were falling into a recession faster than expected. So, the macro stuff is so hard. And we've said it a million times on this podcast to try and predict and make changes to your portfolio, whether we're going to have a recession today, tomorrow, next week, whether we're going to have hard landing, soft landing. And then, of course, something out of the blue can completely happen. Like a pandemic, like Russia-Ukraine war that throws everything off. So
that actually impacted me personally, the Russia war. So before, you could fly directly from Toronto to Hong Kong.
Yeah.
Through Air Canada. Since the Russia-Ukraine conflict, because Russian airspace is essentially closed to North American airlines, you can't fly direct anymore. Okay. And that's why we made the stop in Japan.
Yeah.
Because that was the flight path to get to Hong Kong.
I did not know that. So before we get into talking about our feature discussion, which we'll reserve for a few minutes, why don't you tell everybody about what you noticed in Hong Kong and Japan? You also met with a few investors.
Yep.
I think you have some interesting stories to tell. And after visiting Japan and Hong Kong, do you have any confidence in buying Asian stocks for our clients' portfolios, for example?
So first of all, I'd like to give a shout out to Arena Man Capital and Graham Rhodes, who I met in Hong Kong. Both are very smart investors. You should give them a follow on Twitter if you get a chance to.
Well, we can link their names on the show notes. Okay.
I think there's nothing like a good vacation or a trip to an international country to remind you that people generally live differently in different parts of the world. In Japan, for example, convenience stores and department stores are still a thing.
Yeah.
Department stores.
No one goes to department stores in Toronto. That's all I know.
Exactly.
Yeah.
It's still a very predominantly cash society.
Japan?
Yes.
Okay.
Most people transact using cash. And I think it's just a good reminder that there are differences in culture, there are different consumer behavior, different shopping habits in all around the world, and it's generally very difficult to be able to appreciate all of those things when you're evaluating a business
100%.
without understanding the culture. So a pretty good example of that is, I think Canadians are well known for Tim Hortons. I don't think that people in the rest of the world understand why Canadians drink Tim Hortons. It's just a part of the culture here. It's just the way people like to drink coffee here.
Yeah.
And similarly, it's very hard for someone like me or you to understand why people might dress the way they do in Japan, for example. But that's just the way they do.
Yeah.
And where I'm going with this is that this is why when we're evaluating investments, we generally don't like to invest in countries that we don't understand, which basically means we generally stay in North America because this is a place that we live. I think we generally understand how consumers like to think in these markets, how business is being done.
We're driving distance to a lot of major cities in North America. We can tangibly see in a lot of the companies, meet with companies, understand the rules of accounting, of law, so many things, so much advantage when you're investing in countries that you can understand.
Exactly. And number one, that's why we would never invest in the Amazon of South Korea, for example.
Is there an Amazon of South Korea?
There is.
What's it called?
It's called Coupang.
Oh yeah, heard of CPNG. Yeah.
It's not something that I can personally be able to understand. And then second of all, we generally don't invest in situations where the growth is predicated on international expansion.
Yeah.
So, for example, like there's a lot of companies that are where the investment thesis is China. The China consumer is going to grow demand for like handbags, shoes, or whatnot. We generally don't invest in those again because those are very different markets. It's very, very difficult to evaluate why Nike, for example, is or isn't going to be successful.
Yeah, I see in Japan and Asia, there's all these high-end alcohol companies. I've never tasted them.
Yes.
How can we evaluate those companies? It's not easy. I really do believe that you need boots on the ground when it comes to emerging markets and having a really good understanding. And that's why I push back to clients and to those that say, well, shouldn't we have emerging markets? Shouldn't we have this market? The world's a big place. It is, but you have to know what you're getting into. Look what happened while we were on vacation to Japan, for example. Japan was going to raise interest rates for the first time in a long time, and that was going to hurt this yen carry trade. We don't need to go into that, but the bottom line was, I think the Japanese stock market fell like 15% in a couple days before they said, whoa, we're not doing that. And, that's crazy cowboy type investing that you and I have no business playing around with.
And I think in the situations where, for our own companies where they are expanding into these markets, I think you really want a decentralized management structure where you have a very strong local operator that does understand the market and can position the business accordingly in that place.
So did you happen to go into a 7-Eleven convenience store in Japan?
Oh, all the time.
Okay.
It was like 37 degrees.
Yeah.
And what's interesting about the convenience store market in Japan is that it's totally different from what you think about convenience stores in Canada. In Japan, there's basically 2 or 3 convenience stores on every block.
Okay.
Like you can't not see a convenience store. And more importantly, they sell everything. They don't just sell candy and gum and cigarettes. They sell sushi. They sell like household goods. They sell like cosmetics. You can do banking inside of them. They sell. They're just these little superstores that you can buy everything at.
And are they generally bigger sizes than a normal convenience store here in Canada, or they're just fitting a lot of stuff in it?
Well, the difference is that most of them are not generally tied to a gas station. Like they're just usually standalone stores where you can buy whatever you want inside of them. So the format varies substantially, and we're going to get into this a little bit later, but the Japanese love their convenience stores, and it's a very unique experience where you go in and you can actually buy good sushi at a convenience store.
Meanwhile, Ernest, did you see the news that they opened a Costco in Okinawa, Japan?
Yes.
And apparently there was a 5-hour wait to get inside, and they reached capacity. And I saw a video showing all the food that they sell at Costco. Japan looks awesome. Goes to show that international expansion may not be the type of thing that we're gonna need in an investment, but the thesis for Costco, so much white space for them to grow outside North America.
Well, what I will say is that it doesn't matter what culture you're in. I think every culture values being able to buy high quality merchandise at a lower price than you can anywhere else.
I agree with that.
So it's not surprising that Costco is thriving in places like Japan.
Okay, so getting back to the convenience store model in Japan, you said there's 3 or 4 on every street corner, pretty much on major roads. And
yep, and the evolution of the convenience store industry in Japan is, I think, what the major consolidators of convenience stores in the rest of the world are aspiring to. In Japan, 3 companies control over 90% of the market. They are Seven & I, Family Mart, and Lawson.
Lawson, okay.
They are all just what I described. Like they're all mini stores that sell a wide selection of merchandise, more than they sell in addition to the stuff that you usually think about in a convenience store. And everybody shops at them because they're convenient. They're everywhere. So you can buy everything. Like there's no reason to go anywhere else. And that's what and you contrast that to North America, where the largest chain is 7-Eleven. And I think they still have under 10% of the market. And that's a good trend of what could happen in the long run.
And there's also a lot of different consistency or not consistency across convenience stores across North America, right? Some will have maybe a Tim Hortons inside or a McDonald's inside or what have you, and some will have more fresh goods, whereas some are just cigarettes and beer, right? And so, or there's the Buc-ee's convenience and retail chain in I can't remember exactly what part of the U.S. it's in, but southern U.S., where apparently the food is so good that you just want to go to the convenience store to get your dinner.
Yep.
Whereas no one would think that would be the case here in North America or definitely Canada.
Right, and I think one of the more interesting things about the convenience stores in Japan is that each of the 3 brands have their own quote unquote claim to fame.
Yeah.
So Family Mart, for example, like they're known for their fried chicken.
Okay.
Like that's where you go if you want to buy fried chicken. I think Lawson is more known for their sweet categories, like their desserts.
Yep.
Right. And so I think that's also what you're seeing in North America, where you have like Circle K from Couche-Tard. Like they are known for their slushy machines.
Yes.
And
the hot dogs.
And the hot dogs. And I think that's what you're increasingly going to see is that different brands, you name some, like they are known for their thing. And that's what you go to that convenience store for.
Well, I think the love of convenience stores in around the world makes a lot of sense. And the consolidation, the fragmentation, as you mentioned, is a huge opportunity. And that's why our feature discussion is about Couche-Tard with its, I wouldn't call it a shocking bid, but its bid, or at least a proposal to acquire Seven & I, the parent company of 7-Eleven in Japan. And this is a gigantic deal, Ernest, if it goes through. This would be the biggest acquisition ever of a Japanese company.
Yes.
This would be one of the biggest acquisitions ever of a Canadian company.
Yep.
It's a Canadian company, although Couche-Tard, I think by market cap might be a little bit bigger. They'd be acquiring a lot more stores than they currently have. I think 7 I has 100,000 stores.
85,000.
85,000 stores, whereas Couche-Tard's at 15. So we have to talk about why Couche-Tard is bigger market cap, yet many fewer stores than Seven and I. So let's get into it. The potential proposal of Couche-Tard buying Seven and I.
And it was really interesting timing for the deal because I was just in Japan
Yeah.
when I saw that the proposal was going to take place.
Mm-hmm.
And I think it's important to note that there is no deal.
Yeah.
This is just a non-binding proposal by Couche-Tard.
That's right.
All they did was say to Seven and I, we're interested in acquiring you.
That's right.
And Seven and I hasn't responded yet. They have set up an independent committee to review the deal, whether they want to go through with it or not.
Why did this news leak then? Because they didn't submit a proposal.
Yeah.
It's very interesting how this came out.
They did submit a proposal.
Sorry, they did submit a proposal, but
It's non-binding.
non-binding. So
Yeah.
okay.
They didn't submit an official acquisition offer.
Yeah. So they want to start off on friendly terms.
Yes. And I think the reason that they want to do that is because Japan is notoriously difficult to complete acquisitions in. Like the one thing about the Japanese is that they just don't want foreigners to own their companies. Yeah. We've seen this in the past with companies like Toshiba, for example. Like it's very, very difficult to complete acquisition of a company in Japan, especially of one that there's a strong national pride in.
That's right. I also think that we don't see a lot of deals or takeovers of Japanese companies because a lot of them are not pure plays. They have so many different business lines. So when I was reading that the parent company of 7-Eleven owns convenience stores and gas stations, which is, awesome parts of the business, but then they used to have department stores. They have a financial arm. They have an interest in Denny's Japan.
Yes.
So Denny's, the not fast food, but quick service type restaurant, and just other different assets inside the parent company. And this is across the board in Japan. You'll find these trading houses that essentially just make investments in other companies, right? There might be financial services, but all these companies they're not pure plays. So if you're a pure play company trying to acquire a Japanese company, you don't probably want half the assets, so it's a pain in the butt to make that acquisition, so you probably don't do it. That said, I think Couche-Tard has been looking to acquire 7-Eleven for 25 years.
Yes, it has been said that they've made a couple acquisition attempts in the past. Seven and I never took them really seriously, so like there was not even a press release on these things. Mm-hmm. But this is the third time, and it's
somewhat incestuous too because Couche-Tard, 7-Eleven made an acquisition of a convenience store gas station chain called Speedway in the U.S., something that Couche-Tard actually bid on and did not get. Seven and I got it, actually paid a very hefty valuation for it, and it hasn't helped their stock. I would assume that Couche-Tard management has probably made overtures to pretty much every single convenience store. There was a rumor at one point they tried to acquire a public traded company called Casey's.
Yes.
Yeah, so Couche-Tard
and Carrefour in France.
And Carrefour. I mean, Couche-Tard's goal is to become the largest global provider of convenience products, food, services, what have you. So it's essentially, even though Couche-Tard has I think a $75 billion market cap in Canada, in its mind, it's only getting started.
Yeah, and to your point about 7 and I owning a bunch of random stuff, it seems to like this has been a big point of discussion about the company overall. Mm-hmm. There have been some activist investors going in there and saying, why do you own department stores and grocery chains and financing businesses and all these other things?
Have you had a chance to go through Value Act's proposal to 7 and I management?
Yes.
Yeah.
And 7 and I has actually taken a few of these proposals seriously. For example, they've restructured the business and carved out the department store business into an independent company that it may IPO one day, and as a separate company. Yeah. So they have taken steps to streamline the business, and I think this is why Couche-Tard felt that this is the time to go out and pursue a deal, because 7-Eleven
Yeah.
is
We'll just call it 7-Eleven from now on instead of 7 and I because it's too confusing. Yeah.
7-Eleven
Yeah.
is already kind of undergoing a process to quote unquote unlock shareholder value by streamlining the business and focusing on convenience stores. There are activists, investors on the board trying to shake things up. And the regulators in Japan have been trying to attract foreign capital to Japan.
Yeah.
They recently changed the rules to make it easier for companies to complete acquisitions of Japanese companies. And the rule change in essence is that Japanese company boards now have to they have to take these proposals seriously.
Yeah.
The boards have to evaluate the proposal, think about whether it's in the best interest of shareholders, and they can't just say, no, we're not interested just because we don't want to get sold.
Yeah.
And so I think that's why Couche-Tard feels like it has a good chance this time around.
And explain the recent news about, are they seeking protection, 7-Eleven parent, from a takeover?
There was a report that 7-Eleven's board is seeking a special designation from the Japanese government that it is what they call a core business, or essential to Japan's national security. And there is a case for this because, for example, during the COVID-19 pandemic, convenience stores were were often the only place for people to buy food or access financial services.
Fair enough.
But what this says to me is that the board really doesn't want 7-Eleven to be sold to a Canadian, Quebec-based company.
Yeah.
But it's hard for them to say no to the transaction because it's probably going to be at a fairly attractive premium to its current share price.
That's right. And if you look at the multi-year chart of the 7-Eleven parent stock, it's done nothing.
Yeah.
And if you look at the fundamentals, they're atrocious.
Yes.
Now, the convenience store part of the business may have much better fundamentals. You can't break it out and see. But it's clear that if you were a shareholder in Japan of 7 & I or wherever you were a shareholder, poor performance, terrible operators, disjointed assets. If you want to be protected by some kind of nationalistic law, then so be it. Couche-Tard won't make the acquisition. But one can imagine that this is absolutely in the best interest of shareholders. An acquisition probably at a substantial premium and on possibility of unlocking some serious value. Maybe even Couche-Tard could list its stock in Japan. I don't know what the rules are, but this is going to be a big deal. And Couche-Tard is going to need to raise a lot of money and sell a lot of shares, right? At the end of the day, the expectation is it could be upwards of $40 billion Canadian. Couche-Tard doesn't have that money on its balance sheet, Ernest. It's going to have to raise a lot of debt, issue some shares, and that could come with a listing of shares in Japan, a listing of shares, I think, in the U.S., because let's face it, the jewel of the assets, even though 7-Eleven has a major store base in Japan as well as Asia, it's to get more exposure to the U.S. assets.
Well, that's certainly been 7-Eleven's goal. They have been completing acquisitions.
Couche's goal.
7-Eleven's
goal.
7
goal and Couche's goal.
Yes.
Yeah.
They have been. And that's because, again, the U.S. is a fragmented landscape.
Yeah.
It's largely made of independent chains, and that's where you have the opportunity to grow. Whereas in Japan, there's only 3 chains, and there's already 3 on every block. So, and the demographics are against your favor.
In Japan, yes, for sure.
So that's why they've been seeking to grow outside of Japan.
So 7-Eleven's market share in the U.S. is about 9% from what I've read. So that includes 7-Eleven, that brand, as well as a number of other brands, including Speedway, things they're under their own umbrella, right?
Sunoco, they recently bought.
Okay. And I think Couche-Tard has about a 5% market share in the United States. Then there's some other publicly traded companies, what have you, as well as I guess the integrated gas companies still own their own convenience stores, but big market and huge potential for synergies once if that deal could ever be consummated. So your take, what's the rationale? We kind of said it already, but what's your like key points for the rationale for Couche to acquire 7-Eleven?
I think it's a perfect fit, to be honest. First of all, is that 7-Eleven's footprint is largely in Asia. 80% of their stores are in Japan or in Asia, whereas Couche-Tard's is largely in North America and Western Europe. So for starters, you're basically making a global convenience store giant, where they kind of fit each other's gaps pretty perfectly, except for some pockets maybe in the US, which we'll talk about.
There could be some overlaps, yeah. Okay.
So that's number one. Number two is that Couche-Tard, I think one of the things that's not very well appreciated about Couche-Tard is that they don't just make acquisitions for the sake of making acquisitions. There is always a playbook for them in terms of how do they make money off the acquisitions? How do they generate synergies? And and whenever they do a deal, they always go in and examine as many stores as they can to really see what they can change up. Can we add like a cooler here? Can we change the store layout so that people are buying more gum, right? They do a lot of this type of work for all the acquisitions that they do. And in the case of something like 7-Eleven, especially in the US, it's not easy to really tell who is the better operator, because there's different mixes of products. Some might sell more gasoline, some might sell more like candy and whatever. But I think it's generally accepted that 7-Eleven is not the best operator of its convenience stores. So there is going to be opportunity for Couche-Tard to go in and renegotiate some of the supply contracts for fuel and for candy and cigarettes. And also just by general operational improvements, generate synergies that way. There has also been some buzz about whether Couche-Tard simply wants to take advantage of the fact that they can borrow cheaply in yen and buy a Japanese company. I don't really think that's the thought process around the deal, although certainly couldn't hurt.
Yeah. For those that didn't understand what Ernest is saying, interest rates in Japan are quite low.
Yeah.
They're not, if Couche-Tard was to issue debt today,
In Japan.
in Canada, for example, maybe it would have to issue debt around 4.5%-5%.
Probably more.
Yeah. Well,
for this one.
Yeah. Well, I don't know. Yeah.
Okay.
It depends on, Couche-Tard's not going bankrupt anytime soon versus maybe 1% in Japan, right? So there's that opportunity of using really cheap debt to make the acquisition. Equity's not cheap, though. Equity causes dilution to your existing shareholders.
Yeah.
And they're not going to be able to make, I don't think they're going to be able to make this acquisition all with debt.
No chance.
No
chance.
No. So how does...
Although 7-Eleven is under-levered.
Yeah.
Like they have a very clean balance sheet, as is the case with generally in Asian companies.
So we don't even know if this deal is going to go through. We don't even know what Couche-Tard is offering, but there's an expectation that there could be, even with a substantial amount of debt and equity dilution, there's a chance there could be substantial earnings accretion. Couche-Tard won't tell you that right now because it hasn't made we don't know the number, the offer. But your thoughts on if this works out, how good it could be for Couche?
I think it could be really good.
Yeah.
Again, it's hard to know.
Yeah.
It's hard to know because we don't even know what the price is, let alone other details in terms of the financing and the synergies and all those things. Or a step further than that, what divestitures they might have to make, whether they end up buying the department stores in Japan, for example.
Yeah, which they probably don't want long
Yeah.
term. So the interesting thing about it, and I've been saying, I did an interview on BNN. I said, this is a heads I win, tails I win decision by Couche-Tard. Okay, if it doesn't acquire 7-Eleven parent in Japan, well, it's a non-binding proposal, so it doesn't have to give up any money, right? It's not like they made a proposal, here's the deal, and if it doesn't go through, we have to pay you $1 billion, right? We've seen those type of deals before. So, okay, it wasted a little bit of legal time. Of course, there's a nice story in what's the book called? Daring to Succeed, where Couche-Tard legal team sometimes is just one person and the two founders. Yeah. So they really focus on keeping costs for shareholders low. If the deal doesn't go ahead, well, Couche-Tard is still generating an enormous amount of free cash flow, buying back a lot of shares. Still, on the day that the news leaked out, it actually made a small acquisition in the U.S. So still going to be acquiring many companies going forward, whether they get 7 and I today or not. There's still lots of acquisition opportunities that they can make.
Yep. And I get the sense that the deal kind of came out of nowhere. They weren't planning for this for like a long time. And the reason I think that is because a couple weeks before the proposal announcement, I think they announced a 10% share buyback.
Yeah.
So like that's not really what you tend to be thinking of if you are going to go out and make the largest acquisition in your history.
Yes. Yeah. Probably not. Although those buybacks are just like they offer non-binding.
Yes.
You don't have to buy back stock if you don't want to. We're also at an interesting time for Couche-Tard's business, which admittedly the last few quarters has been tough.
Yep.
And we saw today, it's August 29th, the release of Dollar General's earnings report, and the stock is destroyed as they're saying that their consumer base is not spending as much money on goods that Dollar General sells. Dollar General, for those who don't know, it's a dollar store chain in the United States primarily that sells low-end products, a lot of food, a lot of grocery stuff, a lot of candy, chips, pop. I don't think they sell cigarettes and beer, but I could be wrong. And they said their customer is suffering, and Couche-Tard said their customer is trading down. Instead of buying, I don't know, the Marlboro cigarettes, they're buying no-name cigarettes. Instead of buying the Stella beer, they're buying Pabst Blue Ribbon, right? So they're trading down. So it's an interesting time. As you said, they mentioned the share buyback, the fundamentals of the business have been strong, but this is what you want from your companies. Good times and bad times in the market cycle come and go. This is a deal that could change the name of the game for Couche-Tard, and you gotta attack when the time is right.
Well said. I think the one thing that we didn't cover is that there has been some buzz about antitrust risks in the United States.
Yeah.
Especially given that this is the number 2 player acquiring the number 1 player.
Mm-hmm.
If you look at the history of antitrust regulation for convenience stores and gas stations in the US and in Canada, they generally look at it on a what they call a local basis. It's a very sophisticated evaluation of things in terms of like driving patterns, commuting, to evaluate whether there's going to be less competition or not.
Okay.
So, for example, when Couche-Tard did the name's not coming to my mind right now, but the last time they did a major acquisition in the U.S., they had to divest a couple of gas stations based on this evaluation.
Yeah.
And so there has been some work done in terms of the store overlap between Couche-Tard or Circle K and 7-Eleven in the U.S.
Yeah.
And it seems that they're probably assuming that they do a deal. There is going to be some divestitures, maybe 2,000 or 3,000 stores out of combined 20,000 or so, which is manageable. But again, like given the fact that most of 7-Eleven's footprint is in Asia and doesn't overlap with Circle K, it's relatively immaterial relative to the big picture.
And we're just playing, maybe this happens in our minds, but if this happens, you've got Couche-Tard with the Circle K brand in the US, as well as some other brands that they own. You got, I think, under the 7-Eleven brand, I think they have 3 different US brands.
It's largely 7-Eleven.
Yeah. Do you eventually see Circle K being the main brand, or them keeping the 7-Eleven name?
It'll actually be a bit challenging
Yeah.
for them to fully switch all of them to Circle K.
Yeah.
There's a couple of reasons for that. Number one is that in places like, especially Japan, the 7-Eleven brand is so ingrained in the mind of the consumer that it just doesn't make sense for them to change to Circle K. Like the Circle K brand doesn't mean anything.
Yes.
But the 7-Eleven brand is already very dominant. And we have seen Circle K or Couche-Tard in limited circumstances keep the brands where they think that it makes sense.
The name has value.
So in Quebec, you still see Couche-Tard stores.
Yeah.
So I think it's likely that you'll see
the Winking Owl store.
Yeah.
Yeah.
I think it's likely that you still will have the 7-Eleven brand going forward. The other thing that makes it challenging is that a large amount of 7-Eleven stores, especially in Japan, are franchised. So I don't know how the agreements work in terms of whether they can even switch brands if they wanted to.
Yeah.
So we'll see what happens.
So very exciting. And of course, we're spitballing because none of us have any idea. Even if there is a full acquisition offer and it's accepted, even in favorable terms, that everybody wins, as you said, it's got to go through the regulatory process.
Well, they even have, that's even assuming they say yes.
Yeah, exactly. No, I'm saying let's assume they say yes.
Yes.
Then you've got Japanese regulators, you've got Canadian regulators, you've got US regulators.
Yes.
I'm sure Europe has to chime in for some reason. So
yes.
It's gonna take a lot of time. And so the stock has fallen, Ernest, by about 6 or 7% since they announced the deal, which to me, whatever. I mean, you can't rationalize every single tick in the stock, but I don't see how this deal would be detrimental to Couche-Tard shareholders. Some may say, wow, such a big deal. What risk? But all we've seen from Couche-Tard is we have to give that management the benefit of the doubt here, because they are one of the best in class operators. And they didn't just all of a sudden start out with 15,000 gas stations and convenience stores. They built that up mostly by acquisition, and they acquired the Circle K brand. Then they've done a tremendous job. They just finished the acquisition of Total Energy's convenience store stations and gas stations across Europe, already saying that synergies are coming in. So to us, I think it's a decent time. Interest rates are coming down. If it's going to fund it with debt, maybe use cheap Japanese debt. Also, now that it can get interest on fixed income in Canada and US, probably at lower rates, that's attractive too. Hopefully the fundamentals of the consumer will improve going forward as interest rates and inflation fall. Couche-Tard is just such a well-managed company, and I'm excited to see what happens going forward. And yeah, the pullback in our minds seems to be a decent opportunity to acquire more shares at a lower price.
My best guess right now for what will end up happening for this is that Circle K and 7-Eleven find some way for Couche-Tard to buy everything that is not in Japan.
Yeah.
Because the tricky part beyond the nationalistic concerns in Japan is that one of the reasons why it has been difficult for them to separate the department stores is because underpinning both the convenience stores and the department stores is a very sophisticated supply chain business, which supplies the convenience stores and the department stores and the grocery stores with food and beverages and all that kind of stuff. And so for Circle K to be able to carve that out and, like have to enter into supply agreements and all that stuff with 7-Eleven, I don't think that's really what they want to do. And I might be totally wrong about this, but I don't think the Japanese government's priority is in preventing a foreign company from acquiring Circle K or 7-Eleven stores in Malaysia, for example. So
I just think it's such a shrewd deal because Couche-Tard wanted to acquire Speedway, which 7-Eleven purchased, a nice big chain in the U.S. 7-Eleven paid a hefty valuation for that chain, something that Couche-Tard absolutely wasn't going to pay. And now here, Couche-Tard is, well, we can buy your entire company and we're going to get this asset that you guys overpaid for, and we can buy you at a much lower, like it just makes so much sense. And I think there could be some the divestitures that could happen, which means Couche-Tard doesn't end up paying very, very much for the assets that it wants, improves the operations, as you said. And in a few years, the balance sheet back to normal again and more acquisitions to come.
Yeah, I think to that point about the ultimate price, if Couche-Tard actually manages to not buy the Japanese business in the end, which it is a very good business, but Japan makes up almost half of 7-Eleven's overall profits, in part because it's a mostly franchised business. So it's a asset light and all that stuff. So if they're not buying Japan, the purchase price now becomes substantially less because you're getting that's a large chunk of the business gone.
Yeah.
And so, we'll see what ends up happening.
We'll see what ends up happening. In the meantime, we're just going to continue owning Alimentation Couche-Tard. It's a wonderful business. Anything else to add?
On the deal, no.
No. Okay. Well, we're back from our summer hiatus, and so we'll see you back here weekly and hope to cover a lot of exciting and interesting topics. Please, if you have a chance, please leave us a 5-star review on Spotify, on Apple, on YouTube, and have a great week.